Well, let's get across the market open now. Jonathan Takadina joining us from MPC Markets. Jonathan, welcome. Look, the selling continuing.
Yes.
Perhaps not as bad on global markets overnight. Look, we're also expecting another lower open here. How are you viewing what is going on in markets at the moment?
Okay, so the way I'm seeing at the moment is that we're seeing a big rotation out of expensive into cheap at the moment. So while the US is pulling back, the Mag 7 obviously taking the brunt of the hit. Other areas in the world are actually rising. So you can see Europe getting a bid there, China getting a bid there. So what's happening is basically the really expensive stocks all over the world are getting sold off and getting put into cheaper areas. So obviously the Mag 7 is one of the areas that has been the most expensive. Our banks here as well and our tech sector have been hit. But you can see it's actually rotating into a few of the cheaper commodity stocks at the moment. So at the moment, it's more of a rotation, pretty severe because everyone's invested in growth at the moment. But I think we're not at a stage where I see full panic and liquidations at the moment. So there's still a few things to be positive about, but that could turn as well. So if that starts changing and we're starting to see even the cheaper stocks getting sold off, then it's game on then.
Yeah, I think even a good example of that is what we're seeing in Pro Medicus, really taking a tumble as a local example. So the question for investors, of course, is what is next as we continue to get that drip feed of news from Donald Trump.
Yeah.
Do you see this as a healthy correction potentially?
I think it's a correction we had to have. Obviously, we've had a great run. I think it was like October 23, what's that, almost 18 months ago when there was an absolute low. And then ever since then, I think the only two pullbacks we had were the yen carry trade and I think a bit of a pullback last December. So it's basically been straight up in one go. And then this is the first correction where I've seen it where there just hasn't been a quick rebound. So usually the buy the dippers have come in by now and they haven't at this stage. And so the way I see it, there's still a bit of rotation going out of there. But one thing to be positive about is that we just had dividend season here in Australia, so that money has to be reinvested somewhere. So I think it'll still go back into Australian shares, but I think there'll be some people that might leave it on the sidelines as well.
Yeah, so I mean, do you want to hide in defensive stocks at the moment, or are you looking perhaps pick up some of those cheaper stocks?
So at this stage, I think the easier trade is just stick with what's worked so far. So I still think gold is holding in there. I was here maybe a couple of weeks ago saying that it looks like the gold might stall out here, but it looks like the miners are where the value is at. And we've seen that play out over the last couple of weeks with a lot of the gold miners actually just breaking out and making new highs, while the gold's still hovering around that 2,900 level and kind of just hovering around that area. And what I sort of highlighted there was that even at that stage, gold miners were making more money than tech stocks. So that's where the value is at the moment. Gold's sort of stayed low, but the miners are just playing catch up now. So I think there's a little bit more value there.
Where are you looking for that value? Is it more sort of mid-tier and smaller miners, perhaps, where you're going to get that alpha?
Yeah, so I've been looking pretty much just down the whole scope. All the charts look fantastic. And it's just all about just looking under the hood and seeing who's buying and basically where the action is. So I talked about Catalyst Mines a couple of weeks back. That's broken out to new highs. I talked about Gorilla Gold Mines at around high 20s. It's got up to nearly 40 cents at one stage. And even Polymetals, that's the silver producer based in New South Wales. That was under the cap raise price, and that's popped up near the cap raise. So I was recommending maybe in the mid 60s, and it's popped to probably the high 70s now. So that's where the value is at the moment. And if you're holding the sort of the growthy names, the names that have been hit, assuming that you've you've held those for quite a while, you've held this through this run, you should still be in profit. Okay, so what I would do is just start raising stops up and protect those profits, because the main thing you don't want to do is sort of give back what you've fought hard for as well.
What about some of the bigger names? I mean, the larger producers such as Northern Star and Evolution. You still happy to be there?
Yeah, absolutely. They've been chugging along quite well. I mean, like Newmont's disappointed, but some of the smaller, no, I wouldn't say smaller, but Endeavour, Capricorn, even the larger explorers like Spartan have all done well. Basically, they're like you go from the top end to the middle to the bottom. All the gold miners have done really well, and that's because gold prices is at record highs, and the gold miners haven't actually been running along with the gold price. And now that gold price has stalled, maybe we'll see a catch up, and I think that'll continue for the next few weeks. And I think it's somewhere that's a good place to hide while we're in this really, really volatile phase.
Now, another commodity that's moved just more recently has been coal. What's going on there?
I honestly don't know. That's been an unloved space for quite a while, but I just noticed yesterday. So we had what I consider a decent intraday bounce on the XJO yesterday. It looked like we had an early fall, but it bounced, and I was like, oh, well, I haven't seen this for a couple of weeks now. And I looked at all the charts, and I was like, hang on, the only things that actually look okay are the coal stocks. So basically, Whitehaven, New Hope, Yancoal, they all bounced up. Even the smaller names like Stanmore all had constructive charts. And very, very short term, like I'm not calling a bottom on coal or anything like that, but it's just interesting that in a time where all the rest of the market's getting sold off, there's that one sector that's kind of where the money's heading towards. And obviously, coal stocks are extremely cheap. Most of them are on really low single-digit PEs, and obviously without the ESG sort of investment in there. So that could be an area where the market's saying, okay, well, that's one area that's kind of really undervalued. It's still a commodity that we're going to use for a long time. So they're starting to nibble there.
Is there a danger though? I mean, obviously what we're seeing in the broader energy complex at the moment, it's been quite a bit of pain.
Oh, as always, there's always a danger with commodity prices, because obviously Trump's got the drill baby drill. I think he's tweeted that he wants the oil prices a lot lower. I don't know what his ultimate target is, but it looks like with oil being at sort of 3-year lows, a lot of the actual energy names look constructive as well. So they don't look great. If you zoom out, they don't look great, but I'm just talking maybe in the last couple of weeks, there's a bit of life there. So I'm talking Karoon, Woodside, even Beach are starting to look a little bit constructive here. I'm not saying this is it, like it's going to change the fortunes, but I think that even with the commodity prices dropping, the fact that the actual share prices are sort of rebounding says that there's value there.
All right. And what are you avoiding at the moment?
Avoiding. So I'm avoiding making long-term decisions at the moment. So while we're in this really, really volatile phase, I think what you want to do is, as I said, if you've had a great run, put those stops up, protect the profits. But I'm not saying that this is it. This is the bottom of the pick. I'm not saying buy the dip. I'm very, very short-term focused at the moment. Just day by day, and it's obviously with Trump just making tit for tat moves within tariffs. You just don't know how the market's going to react. So very short-term focused at the moment, and I just say manage the risk, protect those profits if you've had them over the last couple of years.